Hello everyone. Welcome to the Stock Minds web channel. Sea Limited, the Singapore-based e-commerce, digital entertainment, and financial services group, reported its Q2 2025 earnings recently, and the results underscore both its growth momentum and improving profitability. For investors seeking high-growth tech names with a path towards sustainable earnings, Sea's latest numbers provide plenty of reasons for optimism, while also have certain risks. In this video, we will dive into Sea Limited recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Sea Limited. Sea Limited was founded in 2009 by Forrest Lee, originally under the name Garena, focused on digital entertainment, and later expanded into e-commerce, Shopee, and digital financial services, Money. Over the years, it has become one of the leading technology conglomerates in Southeast Asia and Latin America, with Shopee being a major e-commerce platform in multiple emerging markets, while Garena has been known for popular titles like Free Fire in digital entertainment. Sea's financial services arm, Money, has grown into consumer and SME credit, along with payment and financial infrastructure services in its markets. Sea Limited financial performance. Sea Limited delivered an outstanding financial performance in the second quarter of 2025, underscoring its strong growth trajectory and improving profitability. Revenue for the quarter reached $5.26 billion, up 38.16% from $3.8 billion in Q2 2024, while quarterly earnings per share (EPS) surged 364.29% to 65 cents compared with 14 cents a year earlier. On a trailing 12-month TTM basis, revenue climbed 33.95% to $19.38 billion from $14.47 billion, and EPS swung sharply higher to $1.95, a remarkable 641.67% improvement from a loss of 36 cents in the prior period. Free cash flow generation was equally impressive, with TTM free cash flow per share rising 126.05% to $6.47 versus $2.86 a year ago. Profitability metrics highlighted the company's operational strength, including a 44.96% gross profit margin, 6.17% net profit margin, and a robust 20.79% free cash flow margin. Returns also strengthened, as return on assets reached 4.03% and return on equity climbed to 14.52%, while leverage remained conservative with a debt-to-equity ratio of 0.43. Over the past 5 years, Sea Limited has grown its revenue at a 39.2% CAGR. Net income and free cash flow turned positive in 2023 and have continued to grow rapidly since then. Sea Limited has proven to be a fast-growing company, and its growth momentum is not over yet. Sea Limited Fiscal 2025 Financial Forecast. Looking ahead, analysts forecast 2025 revenue of $21.8 billion, representing a 29.63% increase over 2024's $16.82 billion, and project non-GAAP EPS of $3.88, a 171.03% jump from $1.43 in 2024. Reflecting this positive outlook, Wall Street analyst maintains a buy rating on Sea's stock with a price target of $203.06, implying a potential upside of 9.28%, and the highest price target estimates Sea shares reaching as high as $241, an 18.69% upside from current levels. SE stock price performance and valuation. At the time this video was created, the stock was trading at $185.82. Sea Limited stock has delivered an exceptional rally over the past year, giving 100.1% gain that far outpaces the 15.7% increase of the S&P 500 in the same period. Over the last 5 years, the stock is up 19.6%, which underperformed the S&P 500's 101.1% advance, reflecting earlier periods of volatility before its recent resurgence. From a valuation perspective, Sea trades at a price-to-sales PS ratio of 5.61 on a trailing 12-month basis and a forward PS of 5.05, Its non-GAAP price-to-earnings (PE) ratio stands at 61.42 on a trailing basis and forward PE of 47.93, while the price-to-free cash flow (PFCF) ratio is 27.3. Based on Fiscal.ai data, if we look at the valuation since 2023, the forward PS is above the average, while the forward PE is around the average. The valuation remains attractive, as revenue is still growing above 30% and EPS continues to grow rapidly. Sea Limited growth potential. Sea Limited growth potential remains strong, driven by several factors. 1. Dominant e-commerce platform with strong market leadership. Shopee remains a powerhouse in Southeast Asia, commanding nearly 50% market share and solidifying its position as the leading e-commerce platform in the region. Its Q2 2025 performance was outstanding, with gross merchandise value (GMV) increasing 28.2% year-over-year to $29.8 billion, and gross orders rising 29% to 3.3 billion. Shopee's success is built on a mobile-first strategy, an engaging gamified shopping experience, and a robust logistics network via SPX Express, now Southeast Asia's second-largest logistics provider. The platform's Cheaper, Faster at Shopee initiative enhances value for buyers through competitive pricing and faster delivery, driving higher purchase frequency and increased user engagement. In Brazil, Shopee celebrated 5 years as the market leader by order volume, with a 30% surge in average monthly active buyers, underscoring sustained growth momentum and significant competitive advantages difficult for rivals to match. 2. Rapidly expanding digital financial services ecosystem. Sea Limited's digital financial services arm, rebranded as Money, showed remarkable growth in Q2 2025, with revenue soaring 70% year-over-year to $882.8 million. The credit portfolio expanded rapidly, with consumer and SME loans outstanding hitting $6.9 billion, up 94% compared to the prior year, while maintaining high asset quality with non-performing loans around 1.0%. Money's strength comes from leveraging Shopee's transactional data to build superior credit scoring models, allowing it to serve Southeast Asia's underbanked consumers accurately and efficiently. The fintech unit has established advanced AI and anti-money laundering centers at its new Singapore headquarters to support its rapid expansion. With over 26 million active credit users and a loan book surpassing $5 billion, Money's connected ecosystem creates strong customer loyalty and high switching costs, outperforming traditional financial institutions in the region. 3. Strong profitability trajectory with operational leverage. Sea Limited has shifted from purely growth-focused to profitability-driven operations while sustaining strong expansion across all segments. In Q2 2025, the company reported positive adjusted EBITDA in all 3 business units, with total adjusted EBITDA surging 84.9% to $829.2 million. Operating margins rose sharply to 9.3%, a 710 basis point increase year-over-year, and gross margins improved to 45.8%. The e-commerce segment, Shopee, turned profitable with adjusted EBITDA of $227.7 million, rebounding from a $9.2 million loss in the previous year. The company demonstrated disciplined cost control as sales and marketing expenses fell from 20.4% to 19.2% of revenue. Sea's model shows strong operational leverage and scalability, generating significant cash flow while investing in growth. Management's balanced approach reflects confidence in driving growth without sacrificing profitability. Risks to consider. While Sea Limited growth prospect is strong, we should be mindful of potential risks. 1. Industry competition. Sea Limited faces fierce competition in e-commerce, digital entertainment, and fintech from both global giants and regional players like TikTok Shop, Tokopedia, and Lazada. This rivalry puts pressure on its market share and profit margins. As a result, the company must invest heavily in marketing and promotional activities to attract and retain customers. Balancing growth with profitability poses ongoing challenges amid dynamic market conditions, and evolving consumer preferences. 2. Regulatory risk. Sea Limited faced a $40 million settlement related to undisclosed regulatory risks in India, specifically tied to the ban of its hit game Free Fire. This settlement removed a major legal overhang and clarified uncertainties from the past. Additionally, regulatory changes in key markets such as Southeast Asia, Brazil, and India continue to introduce compliance costs and operational challenges that require ongoing adjustments to Sea's business operations. 3. Financial or currency risks. Operating in multiple countries with fluctuating exchange rates exposes Sea Limited to financial risks that could affect its earnings. Managing cash flow, debt, and investments carefully is critical to navigate this volatility. This risk is heightened by exposure to emerging markets like Indonesia and Brazil, where sudden currency changes can increase costs or reduce revenue value, impacting overall financial stability and operational performance. Conclusion. Sea Limited's Q2 2025 results confirm a powerful turnaround, combining rapid top-line expansion with strong profitability and free cash flow growth. Despite premium valuation metrics, the company is accelerating earnings, improving margins, and leadership in e-commerce, gaming, and digital finance across high-growth emerging markets support continued upside. With analysts forecasting robust revenue and EPS gains and maintaining a buy rating, Sea Limited remains an appealing long-term investment. Investors seeking exposure to Southeast Asia's digital economy can view the recent share rally as a sign of strengthening fundamentals, but remember, this is not a financial advice. What do you think about Sea Limited? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.